Herald Linde, Head of Equity Strategy Asia Pacific at HSBC. Herald, welcome back. We always love having you here on India Market Open and on NDTV Profit. So the broad context of our conversation is an outlook to 2026. One could say that we're ending the calendar year better for Indian equities than we started it.
I think that's a very good, absolutely you can say that. When we started the year, there were still earnings downgrades, worries about the profits coming down, valuations being high, foreigners selling. The appetite for Indian equities was pretty poor at the beginning of the year. But as you got a beautiful chart here. You can see that actually it started to bottom out at the end, say in Q2 or something like that. And since then, India has performed pretty good. And the news flow around India is getting better as well. Earnings look a little bit better. Interest rates can come down. You have inflation numbers in India that I have not seen in my whole career, and that started in the mid-90s. So that allows these interests hopefully to come a little bit lower. So there's a lot of things that are suddenly supportive to Indian equities. So good finish of the year.
Okay, so and very well put, Herald, but among them, how significant do you think is the fact that there's an improvement in corporate earnings? That was the biggest complaint, wasn't it? When you looked at Q2, for Indian companies, did you see this as a trend that continues or a base effect getting factored in?
No, I think this is a trend that continues. There is a little bit more going on than just base effects. Base effects maybe help a little bit, but yeah, the worst of these earnings downgrades are behind us. We have better earnings, at least consensus looking for better earnings in 2026 than 2025. And you see that comes from quite a broad basis, not just one company that drives us or something like that. So I think that looks pretty good. And I think you're spot on when you say that is probably the most important reason for investors to become a little bit more positive on India again.
Morning, this is Alex. And I'm just wondering what you think about the currency and how much attention you're paying to it. Because we are, as we speak, already at an all-time low once again. It's heading towards 91 to the dollar. And from the perspective of the outside in, then that's another reason why you say, wait a minute, let me hold off till maybe the trade deal gets done. Maybe the rupee comes back to a level that is more attractive for me as a foreign investor.
No, I think you're absolutely right here, Alex. The currency is always a problem. India, other markets have this as well. Some currencies have their currencies rather fixed or pegged to the US, but India is not one of them. So currency risk is also always something that comes back. And if you go from 90 to 100 over the next year, just making up a number, right? But if you go there, then yeah, you're in US dollar terms, you're going to lose out something like 1/9, what's that, 11%. So then the market can grow by 11%, but actually in dollar terms, you haven't got anything further. So you want to buy when the rupiah is weak, but you don't think it's going to weaken that much further. And I think this is probably something that we're getting to quite soon. The rupiah has already been weak. Yeah, interest rates in the US can come down, but in India can come down, but in the US we also see them coming down. So on that basis, I think maybe we've seen the most. And what you can of course always do if you still think it's a risk, you add some exporters to your portfolio mix. So that if the rupee does weaken, yeah, these companies typically tend to benefit a bit.
Just hearing 100 rupees to the dollar might have given a few central bankers the palpitations. But having said that, when you look at earnings and trajectory, Herald, and of course you study this very closely. So what, according to you, are going to be the front runners heading into the new year?
So I think we got to look at these domestic-oriented companies. So I think some of the banks look still pretty okay. I'm looking at some of the consumer companies, okay, auto companies. Yeah, these sort of companies that have that domestic exposure, that's what I'm looking for. And I think what India also has is a lot of simply, yeah, interesting sort of small niches in the market. It's one of the more diversified markets in the whole region. So there's hospitals and medical equipment and all these sort of things. I would be looking at that and keep my export exposure somewhat limited. But because I just gave you a number as an example, right? That if the currency weakens, you lose out. But I think we've probably seen quite a lot of that weakness already.
Herald, now I was scanning through a lot of global publications, and a lot of them referred to the points that you had made in your note about a month and a half back. I mean, not quoting you per se, but effectively the whole argument of the anti-AI trade, the fact that India has not gained versus the rest of the EM pack, and therefore that sets up beautifully if indeed the trade deal were to reverse, etc. My question is the trade deal with the US the necessary and a sufficient condition for the markets to start performing again, or can earnings growth and stable macros do it as well, even if the trade deal were not to happen?
Yeah, I think earnings growth and macro lower interest rates can actually do a lot already. We do not need that deal, but it would be sort of a cherry on the cake if it would happen. That would really help on the news flow sort of front. I think you're also right, and we spoke about this in the past. Our view has been that AI is going to take a little bit of a step back. We've seen a big rally in these stocks. So we thought, what was it, 6 weeks, 2 months ago, we felt, hey, AI is coming to a level whereby maybe it's going to take a breather. People are going to look beyond AI for something else. Where they're going to look, and this is how India came back on the radar screen. So that's an important sort of driver as well. That we see a sort of a pause in the AI rally across the region, maybe across the world. And I actually think we're seeing this already. If you look at the US market, you see that some of the AI stocks have not performed so well, while the traditional stocks, if you want to call it like that, some food and beverage companies and these sort of things, they've performed quite well.
Herald, we're going to get a large Indian money manager on air soon as well. I would love to know from you though, and we'll ask the same question to him, that when you think about India for 2026, what is the one thing that excites you the most from the equities universe, I mean, or the economy universe, if you will? What is the one thing that excites you the most, and what is the one thing that you are worried about the most?
What excites me simply the most is I think in India you can still find very interesting sort of growth stories that are rather visible. They're driven by demographic shifts and opening up of new markets and increases in GDP per capita. So it's very easy for me to find interesting sort of themes in that market that are very investable in. When it comes to risk, I think the risk, quite a few, I mean, there's always quite a few risk and macro risk and these sort of things. The risk lies on the currency side that gets weaker. And then if you're a US dollar investor, well, that you lose something on that particular front. So that remains a risk, I would say.
You know, just to build upon that story about growth opportunities that you see in India, and I think one thing which has been very clear this year, which will continue into the next years, this flurry of primary issues coming in. A lot of them platform companies, tech push companies, which investors are figuring out how to look at. How do you value them? Do you look at the profitability with different metric, etc.? Just any view on these new opportunities that are opening up?
Yeah, two things. So you have a flurry of IPOs in the market. On the one hand, I think this is really good. On the other hand, it creates a bit of a problem. The problem is, of course, if you have a lot of IPOs, people want to participate, they take their money out of other stocks. So you get a sort of reallocation of money within the market. Sometimes they can depress the market to a certain extent. People sell first before they buy into a new IPO. The good thing is it diversifies the Indian market quite a lot. And I think India is one of the most vibrant markets in that regard across the region. If you look at other markets in Asia, Taiwan or Korea, pretty much the top 10 stocks haven't really changed that much over the last decade or even 20 years or so. But in India, that's quite different. So I think it's a very healthy sort of development. Now, when it then comes to the nature of these IPOs, there are companies, of course, that IPO because they need money to build out a business, and that business is only going to generate profit somewhere into a far future. Then it's your risk appetite, your willingness to sit on it, but also these stocks tend to be quite volatile. To deal with that volatility, that's something that you have to decide for yourself. You got to be careful with these things, I think, in general, a little bit, because it's very easy to promise something very far into the future, but delivering it is of course a whole different thing altogether.
Herald, one last piece, and I'm just wondering what you think about the breadth of earnings improvement. Do you think that it will likely be concentrated, or do you think that you can actually move beyond the top 50, 100 companies and expect that the broader universe will also participate in an earnings up move? The challenge, of course, is that the beat has been bottom line and EBITDA margin led. It's not been top line led. So I'm wondering what you think about the broadness or breadth of an earnings improvement.
Well, actually, from my point of view, and I honestly focus pretty much on the top, say, 50, right, or maybe top 100 stocks in India. It's quite nice and broad, actually. It's not just a few companies that really drive that recovery. So you've in the banking system, you got some of the margin improvement. In the auto business, you see a little bit of improvements in there. So it's across multiple sectors. So I think that's pretty good. What is most healthy, of course, if we see demand really picking up as well, so you get top line growth and operational leverage playing, that's good. You want that, that's preferable over cost cutting and these sort of things. But my suspicion is that we're going to have to pick up in sales growth a little bit and some of that operational leverage story coming back into 2026 as well.
On that note, thanks so much for taking the time. Compliments of the season to you. Always a pleasure speaking with you.
You too.
And wish you all the best.